Okay, it's Dennis at KingmakerForex.com and orangequant and whattololearn.com. And folks, I want to thank you for stopping by. I am more excited about this particular algorithm than I have ever been about any algorithm. And it's called Fatsucker. It is a dynamite algorithm. And as you know, I have slowly grown from making 2% per day to 5%, and now with Fatsucker, I had to give it a fancy name. With Fatsucker, I can get 10% per day, and you can too. Fatsucker because it sucks the fat right off the bones of the trade. Now, as you know, if you followed the site over the past like 10 years when it was whattololearn.com, you know I have given away tons of free trading algorithms that work. Now, if you never got anything from me, if you never bought anything here, that's fine. But this is the one algorithm you need to buy. It's 39 bucks. Stay tuned. I'm going to show you how to use it. Alright, all trading is high risk. Never risk more than you can afford to lose. This is not a solicitation to engage in trading. Trade at your own risk. And by the way, Fatsucker comes with other important components. You'll see the full list at the end of the video. Alrighty, let's get right to it. Okay, this first slide I'm showing you is not Fatsucker. This is your typical Bollinger Band. And if you can read it, more power to you, because I never could, and I have lost more money on the Bollinger Band than I care to think about. No disrespect to John Bollinger, who is a brilliant technical analyst and code writer. But I just can't cut it with a Bollinger Band. So, why am I showing you the Bollinger Band? Because it's comparable in appearance, perhaps, somewhat, to Fatsucker. But Fatsucker is not a Bollinger, and you're about to see the important differences between the two. Now, I will come back to what this legend text is up here, average gain, average loss, and what these arrows are all about. Those are important components included with Fatsucker. But now, let's move on. And here, ladies and gentlemen, is Fatsucker. Just pause the video for a moment and see if you could trade this. Every time it hits the upper band, it's going to return to the lower band. Hits the lower band, it's going to run back to the upper band. Could you trade this? Pause the video and look it over. So, it kind of looks like a Bollinger, but trust me, the mathematics that underlie it is not Bollinger mathematics, okay? So you can just bang them, one trade after another. Look at that, just back and forth. That's all you got to do is watch when it touches those bands. It's going to come back to the other band. Okay, another thing that's different about this, you know how the Bollinger pinches and changes dimension and all of that? This does not. The vertical distance between the bands, I'm saying the vertical distance like that, is the same whether we're here or over here. The fact that it looks like it narrows and tightens up over here, that's an optical illusion. Actually, if you were to measure the distance, the vertical distance between the bands, they would be the same throughout the band. And for reasons that are complicated, but maybe, you know, eventually you'll want to look into it, that's important information to help you understand how the bands work. But as far as trading, all you got to know is when it hits a band, you trade opposite, okay? So now you see why I'm so excited about this Fatsucker algorithm. Why I say you need to get this if you never got anything else from me. Okay, the arrows. Okay, this means whenever you see an arrow at the close of a candle, at the close, because it will change throughout, then what that means is you're going to get significant upside or downside, depending on which arrow it is, red or blue, in the next candle, okay, the next price bar. And what that does for you is strengthen your hand in reading the Fatsucker algorithm. Not that it needs much strengthening, but it does help. Alright, this stuff at the top, the text boxes here, the average gain for the past 10 run-ups, that's talking about the blue arrows, and it's saying that if you had made that trade, then your maximum gain would have been, in this case, 47.8. Actually, what it's reading is way off to the right. You can't even see it on here. But it would have been 47.8 pips. And this is, by the way, Fatsucker is for stocks or Forex. Don't be put off by the fact that I'm using a Forex chart. Okay, and it also shows you your average loss and what that is. And then over here, you can't make out all of that, but the average gain and loss for the red arrows. Now this upper part, the text part, is an unbelievably difficult algorithm to write. I had to get somebody else to write it because nobody on this forum, it's a coding forum, one guy knew how to do it. Okay, and I actually paid for it, so you're getting the benefit of that. Now, as I've often said many times before, I am a compounder. All I really want is to increase my account by 10% per day. And that really does add up. Can you see how you could make 10% per day on this? And it's very important if you do compounding the way I do, that's all you want, okay? And I'm going to show you what that means. Listen, this is a daily chart for the euro-dollar pair. This is like 100 and 200 pip candles that you're looking at here after the signals. So you can make your 10% on this, no problem. Now, I typically don't stay for the whole show of 100 or 150 pips or whatever. I opt out at about 60 or 80. That's because all I need really is like 30 pips a day the way I trade. Let's look at that right quick and see what compounding really means. First of all, compounding is mostly in your head. You can't swing for the fences. You got to get that in your head. You do not swing for the fences. You want 10% per day because every 8 days, roughly, about every 8 days, it doubles the account balance that you have. So a $100 account becomes about 1.3 million in 100 days. A $1,000 account can become about 13 million in 100 days. It's not hard. You trade 70% of available margin. That is, if you're trading Euro USD. Okay, and all you need is a net of 30 pips a day, and that equates to roughly a 10% gain in your account every day. And you can do hourly, 10-minute, daily, whatever you like, okay? In fact, you almost have to trade that way because you're not always getting a signal on each and every period. Okay, obviously, as you see at the website kingmakerforex.com, I test stuff before I put it out there, and I do extensive testing. So I did do that with this algo, and here are the results. Okay, and this is spread out over about a week, I think, because I was just testing. I mean, you know, if I sat down and traded it during the day, then it would be all compressed into a single day. But you can see the results and the maximum drawdowns. You got to live with the devil out there, the drawdown devil, and typically your drawdowns will be larger than your gains, but you have to set a stop loss to accommodate a potential drawdown that's like that, or your stop is going to get hit. That's how it works. And I know that's contrary to logic that says you're supposed to not have your stop loss greater than your take profit. But this is reality. Now, here's another exciting component of Fatsucker. You see this lower study here? Okay. This dark line is the zero line. All the dots and triangles above the zero line are your maximum gains after a signal on Fatsucker, and the ones below the zero line are your maximum drawdowns on Fatsucker. Okay, and they're vertically aligned so that, let me draw a quick line for you here and show you exactly what I mean. Let's pick one. Let's just pick this one here. Okay, you see these two right there? Okay, that's a single trade, and it's telling you what the maximum take profit and what the maximum drawdown was. And if you look overall, the drawdowns are typically smaller than the maximum gains that would have been available to you. It's an extremely useful analytical tool because it also helps you set your stop loss. So this is a daily chart, and you can see down here it's the extreme. This one down here was like more than 100 pips of drawdown. So I would set my stop loss on this at probably at about 120 pips, okay? And my take profit is up here. Actually, I haven't shown you the whole chart. The take profit maximums run to about 200, but I don't rely on that. As I said before, I take about 60 to 80. That's all I want. Well, I want more, but you know, I'll take the next train. That's the way I feel about it. I don't like the risk, because you can see that sometimes with Fatsucker, you know, start up like around in here, and then it'll tip back down before it actually makes its final thrust, okay? I don't want to be sitting there for 3 and 4 days to get my money. But if I did feel like it, I could, and so could you. So back to it, and I ask you to take a look at this chart, pause the video, and ask yourself, could you trade this chart? And by the way, the hourlies and the 10 minutes look pretty much the same as this. So you pick your time frame, and that's what you do. And of course, the final question to ask yourself is, being able to trade like this worth 39 bucks to you? And here's another example. Down here you can kind of pause the video and do a self-quiz and ask yourself if you could forecast which way these things are going. For example, let's take a look right here at, in fact, I want to make that line nice and fat. Right here, well, that's a line. I don't want a line. Hold on. Okay, I want a circle right here. Okay, you would read that if you're a candlesticker as saying it's about to go up, but obviously when you look up above, it just kept crashing, okay? Fatsucker warned you of it because it touched that upper line, that third rail, you might say, and so you would not have been fooled by this. You would have made the correct trade. Okie doke, here's what's included with Fatsucker, everything you've seen, plus Foxtrot and Triple Point, which I gave away for free if you look on the website. And they do help in interpreting Fatsucker, or actually Foxtrot is a standalone. And you've got your gain drawdown algorithms for Foxtrot. It's not for Foxtrot. I'm sorry, I should just not have put that in there. For your gain and drawdown algorithms for Triple Point and Fatsucker. And I throw in as a bonus the famous ThinkScript tutorial that I wrote, which is so basic and so easy to understand, you wonder why you never bothered to write your own code. And if you think you can do better than Fatsucker, you go ahead and write some code, and I think you will make a whole lot of money, okay? And then I throw in some other bonus algorithms that are very interesting, very useful, all for 39 bucks. At kingmakerforex.com. I want to thank you for coming by and looking this over. I'm Dennis at kingmakerforex.com, where you can get the package. Have a nice day.